Mr. Narasimhan, growth in the fourth quarter seems to have been generally a bit slower than in Q2 and Q3. Can you elaborate on this? Has Corona still played a role or played a role again?
When you look at the performance of the company, actually in innovative medicines, we saw a nice acceleration of growth in Q4, which we hope will carry into this year. So overall, we're seeing the impact of the COVID pandemic, while it's still there, becoming less of a factor in our business operations in US, Europe, and really around the world. So we'll have to continue to monitor how the variants come and go and how they might impact healthcare systems. But we are seeing a less and less effect, and in particularly in innovative medicines, where you saw 15% profit growth and 7% sales growth in Q4, you're really seeing now the business be able to perform in a more normal environment.
Let's turn to 2021. Your stock has been a bit lagging behind. Investors seem to have lost some faith. Do you have an explanation for that?
When you look at the share price performance or the total shareholder returns, particularly over the last 2 years, I think this reflects some of the challenges we've had both with launches. We had a safety issue with a medicine called Beovu, and a few other launches that didn't go as well as we hoped, in part because we launched during a COVID pandemic. And then we had some pipeline setbacks as well, and I think that has reduced confidence in our growth outlook. So it's really up to us now to show that with consistent launch execution, consistent pipeline execution, improved Sandoz performance. And we think as we do those things, then of course the share price will follow based on that performance.
Okay, let's turn to the Roche proceeds. So you decided to take quite a bit of this for a share buyback. There has been some criticism that this is not really imaginative. Why did you take this decision?
So when you think about the Roche stake and the approach we took, first, it's a non-strategic financial asset where we saw the opportunity to exit the stake at the market high, which you saw the overall markets were really at a high point in the last part of last year, at a very attractive financial return. So purely from a financial standpoint, that's a sound financial decision when you have a non-strategic financial stake. So that gave us the flexibility to buy back our own shares, particularly because we're confident in our growth outlook, we're confident in our pipeline outlook, and we believe fundamentally our shares are undervalued. So it's a very sound decision then to take a non-strategic asset, exit it at a high return, and then invest in your own shares when you see that your shares are undervalued. So we don't consider it unimaginative, we consider it very sound and disciplined financial capital allocation.